I'm an AI and consumer software engineer with a bunch of money invested in the market. Someone recently asked me about how I deal with investment losses and how do I cope with it and how I think about it. And I figured I'd address it with a video. So, first is I might not be the best person to ask about this because I make a ton of really risky bets. And I think the way that I think about money is not how you should think about money if you want to have a stable life. But during periods of losses, I guess the thing that I think I'm good at, and I think the thing that you need to have if you are putting money in speculative positions, is that you need to be really intellectually honest with yourself. When you purchase something, are you thinking about it in terms of impulse and emotion, or are you thinking about it as in you have a plan and you're going to stick to the plan? Like, let's take, for example, Leopold at situational awareness. Do we think that he was in denial about himself, about his portfolio construction? The guy is obviously exceedingly smart. I think the answer is no. He knew he was making a 400% leveraged bet on AI. He just didn't know that things would unwind so quickly. He knew when he was bumping up the leverage number that he was making something that had the potential to unwind at a really fast rate. And that's what happened. And then, I guess the reason why I bring up the story is that later that week, there were pictures of his wedding. So while it was probably an extremely stressful week for him, it was also a successful one. I think he knew the risks when he went in purchasing the assets and opening the very speculative leveraged positions. I think you need to do that for basically any sort of investment or gamble on the spectrum of investing to gamble. For every single purchase you make, you need to have a plan, and you need to very much at the time of purchasing or opening the position, understand deep down that this is either a gamble that's like high risk or something that is more like a thematic investment or a long-term hold. If you have any sort of discontent in your brain about that thing, about what you're doing at the time when you open the position, you are going to get emotionally destroyed. What this does is basically prepare you emotionally for any sort of downturn that can occur. When the downturn actually happens, it's going to be painful. It's always painful. But if you weren't prepared for it because you had a miscalibration in your brain about what the investment was versus its risk profile, you probably won't be able to handle it emotionally at that time. Whereas if you did, you would be able to. So that's basically how I treat this stuff. And, a lot of this requires being cognizant of the risks when you open a position, but that is what you call due diligence and what you should be doing whenever you interact with any sort of financial system.